Hey guys, what is going on? So short quick video on basically what I've got on watch this week. I'm not going to go into too much detail on it, just want to basically explain what I'm looking at. So essentially we've got push away from this area and we're basically looking for shorts to fill this massive gap down here. Bearing in mind we are kind of in the middle of this and we do have a gap to the upside, but looking at the momentum, this makes sense now for it to follow through. So we are looking for continuation. So as we're looking for continuation on the DXY, we'll be looking at related pairs for further continuation on those, and also on the counter pairs we'll be looking for continuation to the upside. So essentially looking for something with a bit more weight to it. We are in a run of momentum, so we don't really know the full sequence of this in terms of how this is going to formulate, but something like this would be phenomenal. So if I can just grab the tool here, and if we get something like that as well, likewise, you know, I still wouldn't be hesitant on that, and that would be great. So we get a continuation in here and then we follow through to the downside. So that's basically what I'm looking at on the DXY. If we do start to go long, then we'll have to reevaluate during the week and then see for longs. So this is kind of the pivotal point, but continuation through or below this ray line would be great for shorts. JP225, still studying this one, still looking at short potential. So we saw this 123 ascending in the middle of nowhere, but we did see some really great structure to it, so I just wanted to get a better understanding. The nice thing about this is that we did complete this A to B movement, which was, I'll just use this random tool quickly, and then from there to there, and then that was basically what I was looking at, to basically use that as the impulse correction continuation. And in the end we did play. The nice thing about this, and this was the main one I was looking at, was I was taking point from here to here, and then I was basically establishing it from, if we're taking it from here, then are we filling that, or are we taking it from the break? And it didn't quite fill that, so that's why I was quite uneasy about taking any sort of entries there, but something just observing and learning from. And yeah, that's it. So going into the top 6 and additional pairs as well as my others, what I will be looking at over here on Aussie New Zealand is a short. So we have this area here where we double topped, but with this pair you can see from previous studies, which I do urge everybody to do if they get time, is just study how price responds to these value areas, and you can see the risk entries tend to be quite high probability. It does tend to come in for a retest as well, which is interesting, so we'll have to be observant on that if we do come up for a retest and then sell, but more than likely this could follow through. Looking at it on here on the 4 and the 1, we can see here on the 1 hour that if we do break below this area and get continuation, we could be good for shorts. Going back to the 4, we can see that we have nice follow through, great commitment from the 4-hour time frame, and now we just want to see if we can make this trade come down here as a minimum criteria, which I'm looking for, which is like about 5%, and then if we can follow through, we turn into a 15, which is pretty good for percentage return. So that's it for Aussie New Zealand. Aussie yen, likewise looking for shorts. On a high time frame daily, you can see, without zooming out too much, we can see that, you know, we have a value area here. We came in with 3 drives, quite just tapped into it, we sold off, but we didn't quite get the full commitment. Makes sense because we didn't break through it. Now we did break through, we pushed down, created a large continuation, which isn't the most favorable. However, what is really nice about this is that we are getting the follow through. So if we are going to get the commitment now and we are going to go, which these 4-hour candles look really nice, we could see a tight continuation down here for that to run, and that could be yeah, I mean, we'll just have to wait and see. I mean, looking at the size of this, perhaps maybe I'm looking for something a little bit too large, but I will be looking for a bit of weight, I'll be honest with you, just because this is too subjective. Like, the correction has gone on for way too much in terms of where it's located. It's not my typical area. If we follow through and create continuations on the way down, great. That's basically what I'm going to be looking for. You know, I just want to see some sort of pushes and continuations and so forth, so that's fine. But this would be stunning if we did get something like that. We just have to understand the risk that, you know, this could just turn into so many different things, but keeping it very simple, just isolating that on its own and seeing that as the accumulation, this as just basically the one last entry, and then it just drops off. So keeping it simple that way. CAD yen, also looking at shorts on this, looks really nice. So if we can go back to the daily, we can see over here that we've tapped into this value area multiple times now. We've broken this, we've broken that, we've broken this, and now we're selling off again. What we do want to see is continuation to the downside. We do have this little area here that we need to be aware of, but if we can get a pattern with a small gap, which I'll just zoom in a little bit more on the 1, if we can create a correction like this and then we sell off, then we'll have more enough to manage into that low and further through. But I am looking for the follow through to go down, using this as the retest, accumulation, comes into here. Stop protection would have to be very, very interesting. Perhaps maybe we might even use a bit of price over here, but we'll have to wait and see how that formulates. But structure will be king, and then we just follow with that, take a risk entry, go short. An insurance entry in there could be possible, but we would have to wait and see as well. Insurance entry is definitely one to wait for to take away the subjectivity of these areas, but I think more so I'll be looking for just some structure. If we do come into there, then I'll just adjust this ever so slightly, but this is just a rough forecast because we don't have enough data to play with just yet, so we need to wait to see what the markets give us. New Zealand yen, another great pair. We can see here on the daily that we've literally tapped into this value area here. Didn't quite tap into the high value area there near miss. We can fill it, but we can still come down significantly before we come back up. That's something we have to also be aware of. So just looking at this as a short position, we've now broken this low, which is great. If we can get continuation below it to get low, that would be great. And you can even see in here, there's a decent risk reward in there of roughly around about 9-ish%. And it could follow through further, but you'd be more aggressive on your management as you approach those lows. Just because we have the near miss and we're not too far away from it, we can still gravitate and come back up there at any point. So we need to be very, very sharp when taking an entry on pairs like this right now. Swiss yen, likewise. The great thing about this on the higher time frame, we can see that we are trading in basically higher time frames. No real significant area of interest. It's just we have to play this as it is for a momentum play. As the yen players are selling off, we can see that Swiss yen is way overextended to the upside. And if we do get shorts, this could be very momentum filled. So knowing that, we need to be looking for a pattern that actually works well with the momentum. So looking at it on the 4-hour and the daily looks absolutely stunning. You can see how there's just so much pressure on the sell side there. The 4-hour, we are just basically developing within there. I am going to look for structure. I'm not just going to take a trade in the middle of nowhere. It doesn't make sense. You could make out some sort of messy bits, but I am looking for something with a 3 touch in here. So perhaps maybe we come back up, we near miss this, we don't fully touch it, and then we come in again, and then boom, we just tap into it, break above, push in, get the risk entry, and we just sell, and then we're in for a great trade in continuation to the downside, which is ready for just around about London session and so forth. So that's basically how I'm going to be looking to play Swiss yen, but you can see in terms of a percentage / profit sort of region, this definitely has massive potential, especially if this tends up to be the catalyst to then short to the downside. We could see some phenomenal plays across yen pairs, so stay sharp for the yen pairs this week. GBP CAD lost on my top 6. This one isn't the highest of probability trades, but we have to understand that at this point here, we made all of that selling momentum. So now that we're coming back in there, we can basically look at this point or this point for the sell. We've come in pretty corrective in my opinion. We started off with a bit of an impulsive behavior, then we just correctively squeezed towards it. This is more sort of an M star. You know, we near missed it, sold off, didn't quite get the full commitment, and now we've just started coming back up. As we go into the daily, we can see it a little bit closer, and we can see that we are just driving into this now with a bit of corrective impulsive behavior. As you go into the 4, you can see it a little bit more as a corrective channel, and then we've just got this very impulsive rule of 3 where we're just literally just now spiking towards it, seeking that liquidity. What I am going to look for is that continuation of that spike, pushes up, pushes straight back down, gives me a great 4-hour continuation there, 4-hour impulse back in. Something full-bodied would be preferred, and then basically continuation on the hourly. Wouldn't be looking for the 15, I think it would be a little bit more risky in my opinion, but more so looking for 1 hour validity and then taking on the 15 for the refinement entry on the risk entry over here. That will be beyond perfect. Entries here would be higher risk, entries down here would be lower risk. Only reason being is it'd be more confirmed down here, because you have to be aware that this can turn into many things, and it can just turn into continuation and keep going higher. Remember, the higher time frame, despite what we saw, it's in a form of corrective behavior to the upside within the channel, number 1, and then number 2 is we're only tapping into this area. There's multiple areas above which I'm not too interested in right now, but we can easily gravitate to this area, or we can just continue to the upside and move to even more valuable areas or become messy. So there's multiple variations of what could happen in this area, but to remove as much subjectivity as possible, we just want to keep it simple. Look at that one area, single that out, and then use that area as a thesis to then look for shorts. Into the additional pairs. The additional pairs are looking phenomenal this week. I think what I really do like about this is that on a higher time frame perspective, we have this area here which is interesting. We have a 3 drives, we have a near miss over here where we pushed away, got corrective, and now we started moving up aggressively. I think this could be the run to the upside where it kind of feels that near miss and we just go. So I am going to be looking for continuation to the upside for buys. What I do like the most about this is that we are creating structure and we are creating these like double bottom scoops with a slight near miss, which is completely fine, but we will get some really nice structure along the way, and these things tend to happen. We just have to be patient with it, and we have to be able to read through price action. We can see that there is an abundance of trades here, and it is respecting price, but it's just trading it in its own type of nature, so we need to be sharp. I will be looking for something with a bit more weight, so that's why it's on the additional pairs, because it will take a little bit more time to develop. It could just impulsively go and not give me any entries, that's completely fine as well, but I will be looking for something specific. Break above this ray line ideally, and then continuation above there, which will be phenomenal. So that's what I'm going to be looking for. If it does tend to go short and come in for a larger 3-touch, then I could position myself even more strategic for a buy over here, but we'll have to wait and see, because we are trading still within this sort of corrective range, which is very, very neutral at this point, because this is so much larger than that move down, but we just have to wait and see what happens with price. Euro USD could have easily made it to my top 6, I'll be honest with you. I think one thing that I really do like about this one is we are moving with the DXY very, very well. As we saw with the DXY, it is moving to the downside and we're waiting for that continuation. So likewise, we're looking for the continuation to the upside. Structure may be clearer on the DXY, so we'd have to read through the price on the Euro USD and GBP USD. However, very simple. We're trading below this low. Can we create a continuation to push and manage into that ray line aggressively, perhaps? Wouldn't really have to be too aggressive, but you have a 3-to-1, so I think as I approached that, I'll probably lock in 1%. You could say that perhaps maybe 1% would be just pulled a bit too far back, but I think it's more than enough for me, and then I'll just let price do its thing. So it might just get messy over here and then just spike and keep going to the upside, and then next thing you know, you're walking away with like a 9-ish% trade, which then materializes into over 10. So that's something that I will bear in mind, but I will be looking for something with depth like that. GBP USD, likewise, I am going to be looking for those continuations to the upside, because we're on that momentum run. So it's pretty much the same play as Euro USD. I'm using the DXY as the correlation to let it lead the way, and then I'm going to be positioning myself according to how structure presents itself. So right now it's too premature for me to speculate, but I am going to be looking for perhaps maybe a retest of this with a large continuation, and we just move to the upside. USD CAD, phenomenal. So we're in line with the DXY, and this is what I was saying at the beginning of the video, is the correlating pairs, and basically this one, we're just looking for that larger continuation. If the DXY starts going corrective and starts creating a 3-touch to the downside, how would it look here on the Euro USD CAD? USD CAD could potentially do the same thing, but then again, once again, we have a near miss here where it can easily move to the upside, hence the reason I'll be waiting for a push down and a flag for the insurance entry. One thing I do like about this as well is if we do get some structure like this will be more than perfect for us, because we basically have our footprint here, we'd have our 3-touch moving into there with the near miss, we'd push down, create the continuation, and we'd be able to get in for a sharper entry, and we'll be in for the short. The risk entry would be valid, just higher risk, and it would really be a situational one, so it really depends on where I am during the month by the time this shapes up. USD Swiss, likewise, exactly the same that I'm looking at, is I'm looking for shorts. Even though this does look like it could go long, which it still can still move, start creating continuation and move to the upside, fine, fair enough. I do see that there's potential for the shorts, and I want to just be playing the DXY and just seeing how I can take advantage of the related pairs, because right now we're seeing a lot of momentum for the DXY. If this does create a larger continuation, it's a no-brainer, we are going to look for shorts. As long as it's through or below the low, I'm all for it. So right now I'm just going to be waiting for that continuation to be formulating. Like I said, it's very premature. This pair could easily be taken off watch for me. I am only looking for shorts, but I am willing to shift my bias if something really good shapes up, which is essentially that we get a clear push up, we get a continuation like that, and then the DXY is still corrective, and then we can get something like that and we can go long, fine. That makes sense to me, but for now I'm just going to keep it as simple as that, take the risk entry over there, get in for the short, and then I can play that, and you know, easily, if we are trading into these areas over here, I've got about 6 to the bottom of this structure, I've got easily 3%, then I've got around about 6% to the next inflection area, and then I've got around about a 15% trade there. So this is why I'm very preferred on this, and that's with a 15 pip stop loss. Who knows, I might even get scaling opportunities on it too. GBP Aussie, This one definitely needs a bit more time, but I'm just going to quickly go out to the daily so you can see what I'm playing with. So I am looking at the higher time frame where I am looking for longs, but right now we are within this range. And then when we zoom into the 4, we can see within this range, we are within this range. Okay, there is more than enough for this to continue to the upside. However, I am going to be looking to play the 1, 2, 3, as there is a near miss over here as well. So I would like to see if this can create a impulse correction continuation back into this low to then get the reversal to go to the upside. So going into the 1 hour, how I'm looking to play it is just isolating this range on its own, then looking at how price correctively came here, pushed down, near missed this area, correctively pushed back up, broke above, pushed back in, and now it's creating the continuation, which needs a little bit of time to develop. But if we can get that, then we can get an entry over here to get short. And in terms of a risk reward, that actually seems pretty decent. I wouldn't be afraid to risk entry this at all. And yeah, even let's say that I went with a 30 pip stop loss just for argument's sake. You know, I could still squeeze in around about 8% to that low. But like I said, that's a 30 pip stop loss. Realistically, I'm going to be looking to get refined on that around about 17, call it. 17 seems pretty good to me. That turns into a 14-15% trade, so that seems pretty good. Now going into my soft watch / others pairs. So I am looking at silver. Silver definitely has these near misses to the higher value area, but we've impulsed from this sort of behavior down here where we failed to commit to the downside. We accumulated a lot of volume and now we're pushing to the upside. What I would like to see is if we can actually reject from this area and get a continuation to the downside, or if this becomes a pullback for a larger continuation to the upside, I could play that a little bit more aggressive. There is upside potential, but we have to see this as its own little bit of price here within this range. Do we just trade between this range before we move to the next direction? So what I am looking for is to see that, have we tapped into this area on the daily? Yes. How does it look? Well, it looks very bearish at this point, but a little bit indecisive. On the 4 hour, we can see that, okay, we did kind of just tap into it, break above a little bit and push back in. That's completely fine. How did we continue from there going on to the 1 hour? It's just a little bit messy right now, so I do want to see a bit of a follow through. Anything below this ray line would be stunning, or through. So as you've seen, I've drawn it through. Anything through or below would be perfect for me, and I'll be more than happy to take the short there. How I'd be taking the short is I'd literally be waiting for this, take it on the risk. I'd probably add a bit of extra protection, probably go 15 to be honest, and then just play that into this area where you've got a 3%, and then it could just materialize into something a lot bigger, because you can see you have all this room to play with down here. So this trade could really turn into something special. We just have to really wait and see how that formulates. Aussie 200, same situation as we saw with the JP225. We are in very overextended areas. However, what I do like about this is structurally, we have this expanding with a middle section. Then as we kind of tapped into it, we started creating a ascending channel. As we get close from the ascending channel and we look at it on the daily, we can see that we've rejected with a similar candle as we saw on the Aussie New Zealand and silver. We've got that bearish, but this is more bearish in my opinion because of just that long wick, the rejection, the push back in. We would have had to really push out to come back in. As we go to the 4 hour, we can see that we have strong 4 hour rejection from the area, but we are in the middle of nowhere. We are still just correctively squeezing to nowhere, so we have to kind of wait for a little bit more commitment, where I'm going to be looking for a follow through. So another 4 hour push through, which would be great, and then followed with a 1 hour continuation pattern below this ray line, clearing a lot of this space, and then I can be getting in for a risk entry with it, with a pretty decent stop protection, where if I'm just trading the pattern alone, I have more than enough to protect myself for a break even. And then as we tap into here, we've got 5, turns into 8, and then it could actually just materialize into something a lot more. And you can see the similarities throughout the trades here, where I have the protection for the pattern within here, then I have a decent percentage to the next inflection point, and then as we look at it materializing throughout, it turns into something a lot more. So those are the sort of patterns that I am really primarily focusing a lot of my attention towards. WTI, which is US oil, likewise we've seen with a few other pairs. I am looking to see that we've had this massive impulse. This is massive corrective price action tapping into these areas. We've wicked through it, we've pushed back in, we go to the 4 hour, and now we're getting a level of commitment to the downside. We are within this boxed range over here. So as you can see, I've drawn the ray line. I do want to see continuation below there. Anything above could just really turn into something a little bit messy. There's a lot of liquidity sitting in this area as well. So we just have to understand that this isn't just another move to move up and then it just turns into a little bit of liquidity grabbing. But if we do get something deliberate, like price just drops through here, creates continuation, and then we can get a follow through, we have more than enough to manage this area. We have over 1% there. Then to this low we have around about 5, and then we open the floodgates, as everyone likes to say, and we move in all the way down here to around about 20 and so forth. So like I said, this can really turn into a really good trade. We just have to really wait for the confirmation here, and it can still just sell through and we might be down here before we even get an entry. It's completely fine. We just have to wait and see what meets our plan and our criteria to then get involved. But I think this was the type of one you want to be more sharp with, because you may not get something this large. It might be a little bit more of a momentum run, and you might have to look for some tighter flags. I wouldn't go as low as the 15, but I would definitely be looking at the 1. Platinum. Now platinum is one that recently I have always been analyzing, but only recently my broker migrated, I think like a lot of other people, migrated over to a new platform, and because of that they were able to have platinum on, and the spreads are not too bad. So I'm able to trade a few more instruments than I was before, especially with cryptos. So that's something that I will be dabbling into perhaps towards the end of this year. A little bit more, but just to keep this very simple, we can see that we had a clear 3 drives up here. We pushed down aggressively, we had an area of liquidity sitting here, and price just came back up, near missed the low, came back up, tapped in, took all that liquidity out and just dropped off. And now we've left another footprint over here and a near miss, and it just seems like we're correctively coming back in there. So if I go into the 4 hour, you can see how price is reacting. We didn't quite respond to this, which I wouldn't really be looking at that, and you could argue that is what you're looking at, but really and truly the real liquidity is sitting in this area. So we just need to wait for price to get there, and the main thing we'll look at is how price responds once it breaks above. And then if we get a clear push through, because remember we'll be taking out this near miss, filling that liquidity, we've taken out everything we need to at that point, and then we've pushed back in, we'll get that continuation, we get placed in. This one's a little bit more tricky because when I take it, I will just be about 1% to manage there. And then as we, whatever structure we have over here, let's say I've got around about 5 to that point, and then around about 15 to here. And then if we do continue to fill that near miss to the low, you know, we're looking at 27 odd. So you can see how a simple small trade thesis like this can turn into something quite large. However, that is forecasting way ahead. There will be an abundance of more trades in there. Realistically, I'll probably be out for 7%. Reason being is, as by the time it probably gets around to this point, we'll get something a little bit larger. And you know, I always think like this, right? I won't be holding that 7% trade all the way here at 1%. You know, it's not really a realistic thing. I'll be more than happy to hold that, wait for that entry, and see if I can get that one as well after. It is what it is. So that's basically my watch list and wildcards for the week, and soft watch. But if you guys have any questions or anything at all, please don't feel like you want to hold on to them. Feel free to drop me a message. I have been getting a lot of messages in the past 2 weeks, which is awesome. More than happy to give back as much feedback and help as possible. But more importantly, probably rewatch this video, because I did talk really fast because I'm trying to squeeze it into a short period of time because I've just got a lot going on today. But just wanted to get this video out there for those people who are quite consistent with watching these content videos, and it has been quite useful because I have had quite a lot of good feedback. So yeah guys, have a smashing week, and I will catch you guys in the next one.